Start recording. Guys, welcome to the trading room. My name is Sol, glad to be with you. Before we get started, please, all of you in the chat, if you could change your settings so everyone can see what you type, that will be more interesting for everyone. Everyone will be able to see what you type, not only me. And second, quick disclaimer, remember what I'm going to show is just the way I read the charts and I analyze the charts and I make decisions in the market. This does not mean, it's not meant to be a buy or sell signal on any instrument. Just be responsible for your own trading. With that being said, as you know, on Mondays, we go through the major pairs and we do a quickly forecast. So what can we expect on the larger timeframes and what our key levels on the daily charts. And if I see an opportunity to take, a trade, I'll do it. But usually we have more active trading on tomorrow and Wednesdays. So let's see if we have anything lining up, and let's start with our forecast. Of course, if you have anything, just type in the chat and I'll go back and check it together. So for Mondays, we're going to discuss the dollar index and so geopolitics and the calendar. We have some exciting announcements during this week, so just let's be prepared for that. So if we start with the dollar index, we can see we finally broke through the 97 levels that we were struggling. We tested a few times and we were not able to break it. And as the conflict in Eastern Europe and Russia invading Ukraine started, we saw the breakout. A lot of money flying to the US dollar, and of course getting stronger. It's now around the 99s and 100 levels, which won't be easy to break, but I think we'll spend some time balanced around these levels. Now we have established a break of the 97th level, so I think we'll move sideways for a little bit. There's a clear demand. Camera's warming up. Let me turn that off. I'll turn it back in a bit. So I think we'll spend more time just moving sideways from these levels, and then as the conflict evolves, we'll see, of course, or either a breakout to the upside or to the downside. But I see we'll see a little bit of balance during these times. Now, before we move to other currencies, I just want to show you the calendar for this week. Tuesday, okay, nothing for today, nothing very important for tomorrow. We have the PPI in the US, but no surprise expected. So of course volatility, but not a major movement or something like that. And then on Wednesday, be aware because we have a federal funds rate in the US already from last year. There was an announcement that the US will will try to raise interest rates twice during this year. And on Wednesday, it's supposed to be the first one during the year. So from 0.25% will go to 0.5%. I believe that's already priced, and I remember when they announced that they increased, we saw a strengthening of the US. So I don't think we will see much more of a trend continuation because of this announcement. I think that's already priced in the market, unless there's a surprise, unless they decide not to raise it, or in case they decide to raise it more than what's expected. But if we look at the history, we see almost every time the blue bars being the actual and the yellow dots being the forecast. Almost every time, there are not many surprises. Okay, almost every time the forecast and the actual release they match. Okay, so So I don't expect a surprise here. So we'll see how that behaves. Of course, there will be a lot of volatility around the announcement. And then on Thursday, we have the same for the pound, okay, for the UK, now going from 0.5 to 0.75%. So we could expect, or we'll see if it's already priced, a strengthening of the GBP. So we have all these, all these aspects influencing the currencies, interest rates being moved all around the globe. We saw also the Kiwi and Australia, if I recall right, already raising, and Europe, UK, the US all going through that direction. That, of course, that brings interest in investing in those currencies, but also we have all the political and the the fundamentals and the war in Eastern Europe affecting the prices of all the currencies. So it's a very interesting and uncertain time in the Forex market. So we'll see how that evolves in the week, during the week. And then on Friday, not much more. Okay, so be careful, guys, and of course be aware on Wednesday and then on Thursday for those high impact release. Okay, if we go back to our charts, now let's see how every one of the major currencies are behaving against the US. And I've talked about this. We can see the price of commodities. If you see wheat and you see the oil prices, they're all just going up and up and up. So we have a dollar strengthening against other currencies, but we also having a dollar weakening intrinsically. The value of the dollar is going down, so the inflation is going up. So we have all these things affecting the markets. Okay, you can see the oil has a nice pullback, but right now filling this gap and staying above the 104. So it's very, very high and very likely to do a movement up from this area. Okay, so that's the scenario. Let's see how that looks in the charts. Let me go through the MT5 to show you that. So we'll start with the Euro USD. We have broken some important levels. Okay, we had that level. Okay, let me throw that one, and we have this one. And if you see this break, okay, the breakout here created a new demand. So look how it broke down. It stopped. Okay, around the demand back here. You can see that here. Okay, you can see the reaction to the demand. Okay, the breakout went all the way to back demand. We react from there. Okay, and that was a classic break and retest, and that's something I'm always looking for. And you see me looking for that in the 5-minute charts and 1-minute chart. So we had the breakout. This area formed a new supply area. We had the retest of the breaking area, now acting as supply or resistance or whatever you want, and the reaction to that. Also, we had last week the ECN, the European Central Bank, ECB, I'm sorry, they had a conference, and that created this pressure down of the euro and a strengthening of the US. And you can see this looks pretty much as a mirror of the dollar index. So the question is, are we going to break the demand area, or are we going to break previous resistance? So my call would be we're going to start moving sideways. Okay, so my approach to these levels right here would be selling the tops and buying the bottoms. Okay, selling resistance, buying support, but being, of course, very, very careful with what happens in Eastern Europe. Okay, so if we see already the dollar strengthening, expecting the interest rate to raise. I don't think I don't think on Wednesday we'll see a breakout lower. Okay, more strengthening of the US against the euro. What could cause a break up or down? I think it's what's happening in the Russia and Ukraine conflict. Okay, I don't think the news we saw in the calendars will cause a break of these levels or these ones. So right now, what I need to do is to see if there's new supply here and new demand here, so I can sell the tops and buy the bottoms. So for that, I go to a lower time frame. Okay, and that'll give you some clues. So I see the supply, and I hope you can do. Okay, if you go to lower and lower time frames, you will see the supply in more detail. But you can see how there's a big push from this area. That was the reaction. Okay, and we see a big push that this push down itself creates a new supply area. So a test of this untested supply will most likely create a reaction to the downside. So my best scenario, or what I would like to see, is to see the price approaching the supply area in a compression, like in a channel. So there's no supply, there's no demand, all the demand through the channels consumed. And once we meet supply, we see the reaction to the downside. If we approach this area like this, in a movement like that, not in a channel, but in a strong movement up, then I'll wait for price to get there, and I want to see confirmation. Okay, I want to see price action. I want to see a quasi-model forming. I want to see if price goes higher like that, then I want to see a reaction, and then I'll buy. Okay, then I'll sell the retest. Okay, something like a quasi-model or something tell me there's a reversal, okay, or a reaction to that area. So depending on how price approaches the area, that's also the way I enter the market, or I enter the trade. Now, for demand, you can see there's not a lot of demand here. Okay, there's not a lot of demand. It has been consumed. There was demand here, but that demand has already been consumed here. And now the only thing we need to do is to see if there's some demand left here. So for that, we need to go to lower time frames and check how this tail was formed, to see if there's enough demand in order to cause a reaction when prices approaches that area. Okay, so at this very scenario and through these lenses, I see more supply than demand right here. And also given the fact that we are in a clear, down trend or down momentum, we have all the bias pushing down. So my bias is more bearish for this pair. I would like to see markets coming to this area and then trying to sell the supply area. Okay, that would be my call for the week. Look at what's happening with the pound. Okay, pound looks even weakened. Even the fact that they're going to raise interest rate. Okay, so it's very, very interesting. But just look at the sharp movement down. There's a lot of supply. Okay, we have supply, and we have supply. We have a little gap there, was already filled, and I guess there's more supply there. So in one hand, this is overextended. So it would surprise me just seeing this following more. But maybe on Thursday with the announcement, we will see the pullback and then opportunity to keep selling this market. I don't see in this time. I don't see this just making a big retracement or a big recovery from here. I am aware, okay, that there will be some demand there. Okay, but if we zoom in a little bit, just look at the price formation. The market. Okay, we want to see if there's demand there, correct? So if we zoom in, you can see this one tail and two tails already tested the demand. Okay, let me see if I can find it quickly. click in the hourly. Okay, look at the detail. Okay, so we had what it looked like demand here, tested already, created new fresh demand, tested already, and finally did this one. So there is demand here. You can see the, okay, I can now draw it much better. Okay, you can see that demand. Let me throw that to the future. So there's fresh demand, and you can see from this point there was all this movement, and we haven't tested, we haven't gone back to that levels. So once we go back to those levels, we should see a reaction. Okay, so we might keep pushing lower. We might see a reaction to there, but of course, look at the amount of supply there's there. Okay, so my bias would be to the short side. Okay, I would like to sell this market, but just not right now. Okay, I need the market to go lower and react and then sell, or to see a reaction to these levels, maybe these levels, and then shorting. Okay, that would be my approach. But you can easily see the sell power behind this market. And this is a very, very interesting one, guys. This is maybe the play of the week. And this is a yen movement. Okay, if you go and compare all the yen pairs, the yen has gone weakened for some reason. But we were analyzing, this triangle here, and we spoke last week that this will eventually break either to the upside or to the downside. We said buyers are coming into the market earlier and earlier, okay, at a higher price each time, and they're pushing the market to the upside. And we finally saw yesterday or on Friday the break to the upside. Now, just as we saw in the euro, okay, we saw the break, retest, and continuation lower. That's exactly what I want to try to do right now. Okay, I want to see first if there's fresh demand. Okay, if this is a swap zone, if this old resistance now have created a new demand area. Okay, so for that, you go to lower time frames and you see how it's formed and how strong was this breakout. But the fact, the simple fact that there has been continuation today, you can be quite sure this is a true breakout. So what I want to do right now is to wait. Okay, I cannot buy right now. I need to wait for the market to make a pullback, and then I want to catch the continuation higher. So I go to lower time frames and I look for mid-term demand area. So this is the breaking area. You can see here right now, this is the breaking area, and you can see from this point the market just shot, went all the way up. So then you wait for retracements to meet demands, and wait for price action, and you try to catch the next movement up. So ideally to the breaking point, okay, ideally something like that. But the breakout sometimes, or the pullback sometimes, is not as deep. So it sometimes happens to these other levels. Okay, so we finally see a breakout. I want to wait for a pullback, and then I'll try to catch the retracement. Let me show you just where is this breakout likely to stop. Okay, we're about to test these levels. Doesn't look like there's a lot of supply there, but it's worth going to lower time frames and see how is that form, because from that level price, and that was back in 2017. So it was like 4 or 5 years ago. We haven't visited these levels, so we might see a reaction there. But in case we break that, then we go all the way to that supply, and that's a very clear supply. Okay, you can see untested supply, and from those levels, the large movement we created. So I'm not sure there's enough supply there. We're just watching and seeing if price reacts there. But if not, we might see a continuation higher all the way to that supply area. Okay, so but the play is to wait for a pullback and then a continuation higher. Okay. Then CAD and franc have been very balanced. There's not a lot of price action, certainly not direction. Okay, we just see choppy movement up and down. So I don't expect this to change. There have been some good attempts for this to break to the upside or to the downside. We saw oil prices going up, so we expected to see a strengthening in the CAD, which we didn't see. We also saw the US dollar going strengthening against all the rest of the currencies, but not the Canadian dollar. So these two pairs are very strong and very balanced, and I expect that to continue. So my approach to ranging markets and non-directional markets is just selling the tops and buying the bottoms. So in this case, I would like to see if there's some supply there, if there's some demand there, or demand there. So for that, the same, you do the same exercise. You go to lower time frames and you see the supply. Okay, this supply is very clear. Okay, you can see the supply right there. You can see also the demand. Okay, this what a lot of people call the pin bar or something. It's a clear demand area, which caused all that movement up. So from these levels, we've already reacted. Now in the middle of the range, so I want to wait for prices to come again, either to the top side in order to sell, or to this level or this level in order to buy. Ideally in a channel, but if it's a strong directional movement towards that area, then I want to wait for more price action and confirmation and see an opportunity to trade those. Let's go to the AUD. Okay, the Aussie and the Kiwi against the dollar, they're behaving quite similar, and we don't see the sharp movement down we saw with the euro and the pound against the dollar. The Kiwi and the Aussie are relatively more strong against the dollar. We see how they strengthen, but since then we kind of see a correction. Okay, and we saw what looked like a Quasimodo. Okay, we had the channel, the breakdown, retest of supply, and continuation lower. So this will be. It's very unclear where are these heading. You know, the Australian dollar is very influenced by commodities prices. So we saw the commodities prices going up and getting stronger. So that might be the reason why the Aussie is also getting stronger, and gold prices we're going to see. So there's a lot of gold in Australia affecting the prices in Australia and the Australian dollar. So it's very unclear where is this heading in terms of supply and demand. We have a channel here, so we have demands being consumed. Would be interesting to see these areas if there is some demand. So let's go back to the okay. Yeah, so we can see the demand. We can see the demand here. So the back, we fill that, and we have all that area there. Not much here. This supply was already tested. You can see here this tail and going back down. So for me, it's not the best price action or patterns I look for. So I would wait for more price action to tell me if it's worth going long or short. I don't see any clear bias or direction or trend. So I would prefer to stay on the sidelines. Okay, for me, it's easier to recognize a trend here, or a bias at least, than what I see here with the channels and moving sideways. It's hard for me to read it. And let's look at gold. We saw gold just surging and pushing higher and higher. We had this attempt to reject the movement, and that failed. So that's a very bullish signal. After a closing like that, the market just going up and breaking that, that's a very bullish signal. However, we have a decrease in momentum for Thursday and Friday, but it's struggling to go, to make the, after these movements, these days formation, we should expect a movement up. It's struggling to do that. I think it's heading towards more demand. Let me see how is that form. Yeah, the demand is not very clear here. You can see there's no a clear demand, and maybe that's why it's struggling to, to push the market to the prices higher. In the other hand, in the supply hand, you can see the sharp movement here. So a lot of supply, maybe from those levels. Okay. Myself, I almost always prefer to be long on gold, and I still believe as the war continues, there will be a lot of money flying into the commodities and gold. So I would like to be long on the on gold, but I need to see for some price action, because I don't see any demand available here, not on the dailies and not on the hourlies. Okay, that you can see there's no clear demand here. So I would really like to see new development. So prices going lower, price action or something tell me this is ready to go high one more time. In the other hand, it's very unlikely just from this movement just to to push the market all the way down. So either case, my next movement, the next movement needs to be to the upside, because this might go like this, or it might go like this. But the next movement, okay, it's a leg higher before it continues all the way to and retest the top, or stops, make a lower high and reverses and goes down. In any case, my very next trade needs to be a long trade, okay, to try to catch this movement here. So I'll just wait for price action to form and tell me price is ready to go to that in that direction. I'll start building some long positions on gold. Guys, any pair you follow and you want to analyze together, it's a good moment to do that. Let's see if the camera is back. It was a bit tired. Yeah, we're back. Some comments coming in. And by the way, guys, we're working very hard to release soon, probably in the next days or weeks, a new program. So just stay tuned on social media. Barry, GBP USD, let's check that. Just before I drag the chart, I was going to tell you what I expect to see, which is, we saw the pound here weak against the US dollar, and we saw the Aussie relatively stronger. So I expected already to see a pound dollar very, very weak. Okay, a pound Aussie dollar. This is a great setup. Okay, this is not a pair I follow, but since I opened it already, I want to follow it for this week, because in one hand, this is way overextended. Okay, this movement is, I don't know, maybe I'll have to do run the numbers, but if you see, just by your clean eyes, okay, look at the down movements. So on average, they move this almost 600 pips, 500 pips, less than 400. This one was 700 pips, and this movement has gone 1,300 pips. So it's 2 or 3 times the average price that moves to the downside. So this is way overextended. It's very, very hard for it just to continue lower without a break. So the break and the stop needs to be either a sideways movement or a retracement higher. So this is a very nice setup. I would like to see a pullback and then a continuation lower. A lot of people will throw on these kind of movements, will throw tools like the Fibonacci. Let's see how that looks. Okay, and they will try to to see the 20, 27, 38, and 50%. Now let's try to compare that and see if there's something behind those numbers. If we go to the hourlies, I would like to go for supply areas. Okay, so you can see right around the 88, there's some supply right there. Not much here. Certainly some resistance, but not clear supply. I don't see any other clear supply. Let me see on the hourlies. So on the 4 hour, you can see this one and that one right there. Okay, so we have a match in the 38 and we have a match at the 61 and nothing really at 50%. But it's sometimes nice to see, the correlation between the tools and the supply and demand area. So I would wait for pullbacks to these levels, and then at least a retest. So possible scenarios, and this is something I always run in my head. Okay, I expect this. Of course, this might go sideways. If that goes sideways, that's a different pattern. But if these pullbacks, then it might go to there or to there. It doesn't matter, and it might go to a retest or to a movement like that. Okay. So in any case, my next trade would be trying to catch this movement right here, and then depending on price action, this might go all the way to a retest of the lows, or just to form a higher low and then a trend reversal. Okay, but in any case, I would like to catch this movement right here. So I want to wait for price to go up and then trying to build selling positions, okay, to try to catch this leg right here. Waited for pullbacks. Do you stock the position and wait for the Mr. move? Adelaide, that's a good question. On the dailies, I do two different things. Either place limit orders, so sell limit orders at different levels, or I just wait and see the closing day, okay, the closing hour, how the price closed, and depending on that, I start wait to see the pivot point, and then I start selling. But something I do very constantly is not going very heavy at my first entry. So I might sell this area, and if price continue higher, I might sell a little bit more there, and if price continues higher, I might sell a little bit more there, till the point where my setup is not valid anymore. But I allow myself to to build into a position. Just for me, it's more it's easier to gives me flexibility, and it's easier to manage that way. Yeah, if my limit order is not triggered, you close. So depending why it didn't close. So if I place a limit order here and the price just goes and then reacts and didn't take my limit, so yeah, that order is not already valid. But it's if prices just starts to move in a channel and it's taking time for it to go to my limit order, then I wait. Yeah, I wait until the the movement I'm looking for happens. We don't know which level the retracement will finish and reverse right now. Of course, we knew. If we knew, we would make millions on every trade. So that's why for me it's easier starting with a little bit, and then if it goes higher, then I'll add a little bit more, and if it goes higher, I'll add a little bit more, because at some point there will be this reaction. Okay, it would be very, very surprising for me seeing this movement down and then a movement like that without any retracement. Might happen, but statistically, it's very unlikely to happen. Elijah, you record all the trades? I mean, if you mean if I journalize all my trades, my long-term trades I do. My scalping and lower time frames, I do it by a session. I don't journalize every single trade, because I take a lot of positions in one single setup. So I journalize my setups to try to learn something from those. And New Zealand franc, let's look at that. Just remember the let me show you that, just so you guys are aware why we have some restrictions in place. So our liquidity providers have increased their margin on the franc pairs, and that's why if you trade franc related pairs, USD franc or Euro franc, it will consume a lot of your margin. Okay, so just be aware of that, and that's because of the Euro franc movement. If you just look at even on the monthly, look at the levels where we're heading, and the Bank of Switzerland already said they will intervene. Okay, and they will do something in order to strengthen the euro against the franc. A lot of movement is going out, a lot of money is going out of the euro. Okay, with the conflict in Eastern Europe, is going out of the euro into the franc. But the franc, the Swiss bank, they don't want a parity. Okay, they don't want the euro and the franc to be at these levels. Okay, and at the 1.00 level. So that's why they said they will make some adjustments, so they weaken the franc against the euro, and that's why we saw this reaction. Okay, so we see the euro weak against the US, but now getting a little bit stronger against the franc. But as long as we don't break these levels, 1.1 or 1.05 or something like that, I don't think we're in danger. Okay, in danger area, and we don't like to see. Last time the Bank of Switzerland did something, we caused this movement. So just be careful with that. And with that, let's see New Zealand franc. And we saw both pairs strong against the US, and we see a slight strengthening of the Q against the franc. But you can see, let's go to the euro, to the 1 hour. You see there's not a lot of, okay, you can see the channels and not very directional movement. Okay, you can see how this is forming, all going up and down, up and down, up and down. So there's a lot of balance. There's more buyers to the Kiwi than the franc, but you can see there's no directional movement. There's no movement like this one, not a lot like that, more like in a channel. We should be reacting. Okay, that area that was demand back in time, once it broke, that becomes supply. Let me see how that looks in the hourlies. Okay, you can see the supply, okay, area there, and we're reacting right now. We're reacting to that. Okay, you can see we touched it, we tested it. Now we're reacting. Hard to tell where it's going. We saw there's not a lot of demand, so I don't know if there will be at what level. Probably all the way down here. The buyers will be active again. So there's a little bit of momentum to the upside, but we are reacting to strong supply right now. So it might push the market all the way to these levels and then a continuation higher. Marine, that's a great question. I would appreciate if you type it to everyone, not only to hosts and panelists, but you are just wondering about the difference between supply and demand and support and resistance. And I'll tell you, I trade both. I'm fine with support and resistance. You will find much more opportunities with support and resistance than with supply and demand. If we go back to this example, let me clean this a little bit. Objects. On real time, this would be a resistance level. Okay, this one right here, 1, 2, 3. So if you find this, and on real time, I remember there was not a lot of demand down here. Okay, but you could take advantage of selling this area, okay, and having some profit. And of course, the third time is now it's very easy to see the break up, and the sell would have failed. But a lot of time the Forex market stays in a range. So support and resistance, they might hold 2 times, 3 times, 4 times, 5 times, and you can take advantage of all those times. If you're waiting just for extreme demand and supply areas, you will simply have less setups with a better odds to succeed, but you will have less opportunities. So it's just a style and something you need to feel more comfortable with, and they're both good. Elijah, in my experience, how you get to supply and demand. I would encourage you, Elijah, to go to the YouTube channel, and there's a series of, I don't know, there might be 2 full playlists explaining supply and demand and what's the rationale behind it. So it's just identifying with your eyes where there was a clear imbalance between buyers and sellers. So there will be more behind the scenes, more guys waiting for price to come back to those levels to take advantage of those levels and prices again. All right, yeah, just try it out and see how that works out for you. If you feel comfortable with, do some forward testing with supply and demand and see how that works in comparison to your support and resistance, and stay with the best for you. Okay, guys, I think we'll wrap up here. We had a nice discussion and nice analysis. For me, the clearest for the week would be the euro, pound, and yen. The yen pairs are very, very clear. So I would stick to the ones I feel more comfortable. I didn't, I can find reasons why to trade the Aussie dollar, but I don't see here a clear pattern I recognize and I know and I feel comfortable. So I will just stick to the ones I do, and I have more odds to do better there. Thank you, guys. So thanks for coming. Thanks for staying, and be careful. Be aware Wednesday, Thursday with those high impact news, and all the time with what's going on in Eastern Europe. Okay, just be very mindful. And Thursday, remember, there's a third session with Dr. Gary Dighton. Strong emotions will deal with stress and anxiety. It will be very interesting. So hope you can take advantage of that as well. Till then, guys, see you. Bye-bye.